You sound like more.
The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, ladies and gentlemen. Welcome to Magic Bricks webinar, our endeavor to empower you with insights on the Indian real estate market performance and consumer sentiments on property prices in the next 6 months. The topic of today's session is Check Property Trends, Assess Consumer Sentiment using PropIndex and Housing Sentiment Index. And our guest speaker today are E.J. Jayashree Kurup, Dr. Venkatesh Panchapagresan, and Uma Sitaram. Jayashree Kurup is the head of content and research with Magic Bricks. She is involved with a number of global research initiatives and specializes in analyzing research data to provide usable solutions to users. She also works with business in using industry dialogues with senior management in her domains of expertise to generate content solutions that keep audience and industry engaged. She has been a business journalist for over 2 decades with the Times of India, the Economic Times, and the Financial Express. She writes extensively on real estate and infrastructure, city management, information technology, human resources, and management. Venkatesh is Associate Professor of Finance and Coordinator with IIM Bangalore. He has almost 20 years of experience in academia and in global financial services industry after finishing his PhD in finance from the University of Southern California. He has also worked with Goldman Sachs Asset Management in New York between 2005 and 2008, overseeing trading research for their quantitative hedge funds. He was a finance professor at the Olin School of Business at Washington University in St. Louis from 1998 to 2005 and has published extensively in top peer-reviewed academic and practitioner journals of the world. He is certified in India as a chartered accountant and a cost accountant and holds a PGDM from IIM Calcutta. Uma Sitaraman is Research Associate at the Real Estate Research Initiative Center at the Indian Institute of Management, Bangalore. She has over 13 years of experience in the finance industry. Prior to joining IIM Bangalore, she was Vice President, Quantitative Services at Amba Research India Limited, a Bangalore-based KPO, where she worked on index construction methodologies, fixed income products, and headed business development for fund marketing services. She holds a Master's in Financial Engineering from University of Berkeley, California, USA. So, without further delay, I introduce you all to our guest speaker. Over to you, Jayashree.
Thank you, Aradhana. Good afternoon, everybody. Thank you for joining in the Magic Bricks webinar on the PropIndex and the Housing Sentiment Index. As part of the Times Group, Magic Bricks has always believed that we would like to empower the consumer in whatever the endeavors are. And the best way to empower the consumer is to provide more and more information so that you can make informed choices. The PropIndex is an India apartment index evolved by the Magic Bricks team, the research team. Let me introduce you to what the apartment index is all about. The PropIndex is a tool that provides detailed information on price movement and supply and user demand for multi-story apartments and single floors listed on Magic Bricks across cities. If you look at what all it covers, we carry the National Property Index trend, the City Property Index trend, the Listed Price Monitor, a Rent Monitor, Yield Meter, the top preferred locality city-wise, the Demand and Supply Analytics locality-wise, locality price ranges, realty news. The PropIndex Jan to March 2014, which is the latest edition in which we have completed 3 years of quarterly findings. We see that the National Property Index rose by 1% in the Jan to March 2014 quarter. The city index values ranged between 1 to 3%. Rental values rose by 2 to 16% with over 50% localities across cities. This is an important finding because we find that rental markets have become robust across the country. The rupees 30 to 50 lakh remain the most preferred category, especially in Bangalore and Pune. Premium luxury properties recorded an oversupply despite robust demand of over 20%, which actually means that of the total demand in the country, in every market, at least 20% of the demand was for premium luxury properties in many cities. And despite such a robust demand, 20% is a huge demand for luxury properties. Despite that, we find that the supply has been ahead of demand. Mumbai topped demand for properties worth rupees 2 crore and above, followed by Delhi and Gurgaon. If you look at city trends, we found that in Delhi, rental values rose in nearly 75% of localities. 4 BHK and above, worth over rupees 2 crore, were more in supply than in demand. These are just key findings. There's a lot more. Do visit the PropIndex segments and check out what the details of the findings. In Gurgaon, over 82% of localities recorded an increase in rental values between 2 to 16%. About 65% of the, properties worth rupees 60 lakh and 2 crore. The Golf Course Road and Sona Road recorded the maximum demand and supply. In Mumbai, rental values recorded a rise of about 3 to 12% in over 90% of localities. There was an improved gross rental return on investment noted this quarter, which means that 1.87 to 3.47 was the return on your property investment in Mumbai. In Pune, there was a rise in capital values in over 80% of the tracked localities. 2 BHK ready-to-move-in apartments were maximum in supply in the rupees 50 to 60 lakh range. In Ahmedabad, demand rose by 4% for properties worth rupees 1 crore and above. Demand dropped by 5% in properties worth rupees 40 to 70 lakh. In Kolkata, over 70% localities recorded a rise of 2 to 10% in capital values. In Chennai, of the tracked localities, 50% recorded a rise in rental values. Hyderabad, the demand shifted from 2 to 3 BHK units. This is important because Hyderabad is a market that is coming out of a recessionary trend because of the uncertainty over Telangana. So now that the Telangana issue is resolved, Hyderabad market is seeing a lot of movement. Maximum properties delivered in 3 BHK in the budget of over 70 to 80 lakhs. In Bangalore, central Bangalore witnessed the maximum demand for high-end units worth rupees 1 crore and above. Over 70% of the tracked localities recorded a rise in rental values. Now, why would you need the PropIndex? For the industry and real estate developers, it helps you understand buyer preference, typically demand, in property type, the size, the configuration, the budget, the locality. For government offices and ministries of urban development, it helps you assess the demand and supply, and this helps you to make real estate policies. So it is giving you statistics that help you in policy making. For construction organizations, it helps you to forecast demand and supply situation at the region and locality levels. Consumers can use this information to endorse their home buying decisions. If you want to buy a house and you want to understand your locality and city better, if you want to understand the real estate trends and analysis, not only do you get price movements, but what is happening quarter on quarter or year on year in localities. How to improve your financial status. If you invest an X amount, when can you get a good yield out of your property investment? How did we go about constructing the PropIndex? It is based on listing of apartments and their capital and rental values on the website magicbricks.com. Individual properties are aggregated into localities. It is weighted into cities and then to the national index. The weightage is based on the supply of properties and the price of the property. So it is at the locality and city levels. We have covered 11 cities, over 620 localities in Delhi, Mumbai, Chennai, Kolkata, and Bangalore, in Tier 1, Pune, Hyderabad, Ahmedabad, Noida, Gurgaon, and Ghaziabad. Capital and rental value trends are noted quarterly. The yield on investment is computed quarterly. Extensive user demand analytics. Every time you perform a search on the site, there is some information, a footprint that you leave behind. These are analyzed to understand demand in the markets. The demand versus supply statistics tell you whether there is oversupply or undersupply. When there is more supply, you can actually negotiate your rates. When the supply is short, you will actually, it is a seller's market and you will not be able to negotiate quite as much. The top 10 preferred localities city-wise is showcased. This helps you to understand if the locality is in high demand, that is where you may not be able to negotiate as much as possible as you can when there is not so much of a demand. Heat maps tell you the spread of the properties in the localities. Thank you so much. Aradhana, back to you.
Yes. So what I'll do, Venkatesh, I'm giving the presentation rights to you. Can you see the notification?
Yes, I am. Okay. All right. Can you guys see the screen?
Yes, you can start the session.
All right. Thanks a lot. Good afternoon to all of you. This is Venkatesh Panchagasan. I'm lead of the IMB Century Real Estate Research Initiative at IIM Bangalore. So what we do is to improve the quality of data and research in this sector. So our initiative is about 2 years old. And we have started several projects. One of them is this Housing Sentiment Index, and we're going to talk a little bit about it and probably take more questions down at a later point. I'm joined today by Ms. Uma Sitaraman, who is the lead researcher responsible for the Housing Sentiment Index. So while I will provide a brief overview of the index, she will take us through the details, especially about this quarter's results. The interesting thing about the Housing Sentiment Index and how it matches up with what Jayashree just talked about, which is the PropIndex, is largely to do with largely to do with the time frame you're looking at. I think the PropIndex looks at the transactions that are actually have happened, while the Housing Sentiment Index is looking at what sort of expectations do buyers have about future prices. So both of them complement each other in the sense that one of them looks at what happened already and one of them is looking at what's going to happen, at least from a buyer's perspective. So if you, for the last 4 quarters, we have been putting out this index that captures the buyer sentiment across major Indian cities. This is actually a collaborative effort with Magic Bricks, in the sense that Magic Bricks provides us with the buyers, potential buyers who visit their site. We believe that this index is the first scientific index because it's based on very rigorous methodology that is commonplace amongst global sentiment indices. So we follow a diffusion index methodology, which is very standard in this sentiment index literature. And what we do is we look at information both on buyers' expectation about prices, and also we collect a host of other information like demographics, gender, income levels. We include details about the properties, some of them very similar to what PropIndex captures in terms of whether it's apartment, land, whether people are interested in buying apartment land or villas and so on. The advantage of collecting a host of information like that is that it improves the quality of the analytics we could do on the buyer sentiment. We can isolate the set of buyers who are more optimistic about the future and also those who are more bearish about what's going to happen to the real estate prices. There are 2 kinds of information that comes out of these indices. So I wanted to spend a minute on that so that we are familiar with how to interpret the numbers that come out of our index. One is the absolute level of index. So the index itself ranges, the value of it ranges from 0 to 200. And 100 number would imply that an average buyer does not expect prices to either increase or decrease. So it is expecting the prices to remain flat. If you have an index which is around 140, that would signify that about 7 out of 10 buyers are expecting prices to rise, while 3 out of 10 buyers are expecting prices to fall. So the extreme values of 0 and 200 essentially represent either everybody in our sample is expecting prices to fall or expecting prices to rise. So the index is designed in such a way that the average comes back to 100. So we are looking at variations around the number 100. The other kinds of information, the other kind of information that will come out of this index is the change quarter to quarter. So you could have an index of 120, which means that more buyers in the market are bullish about the prices in the marketplace, while the next quarter it could come down to 105 or something like that. So that would mean that even though an average buyer is still expecting prices to go up, but the change is indicating that lesser number of buyers are expecting prices as compared to the previous quarter. So we should look both at the absolute level as well as the change quarter to quarter. Our index is constructed very similar to what PropIndex. We have done it at the city level, and we aggregate it up to a intercity level index, which we call as an aggregate index. But we also provide information about the sentiment at the micro markets for each one of these 10 cities. The high level highlights for this quarter is the aggregate housing sentiment is slightly down compared to the previous quarter. As I said before, it's still 108, implying that marginally you see more buyers expecting prices to rise in the next 6 months. The sentiment in Mumbai especially has changed quite a bit. In fact, of the last 4 quarters, this is the first quarter where Mumbai has actually gone above 100, implying that in general prices were expected to fall in Mumbai. The sentiment in NCR is still weak compared to the previous quarters, except in the case of Delhi, where we are seeing some slight pickup in terms of the housing sentiment. Bangalore by far has the absolute highest housing sentiment index. It has a number of 140, suggesting 7 out of 10 buyers are expecting prices to go up. And not only the absolute number is high, even the change is very high, so compared to the previous quarter. So there are more people expecting prices to go up compared to the last quarter. Compared to PropIndex, where there are more transactions that Jayashree reported was happening in Hyderabad, we find that in terms of the sentiment, still the buyer in Hyderabad is sitting on the fence. The HSI has dropped below 100. In fact, consistently it has been below 100 except for the last quarter, where some amount of resolution was in the sight for Telangana. But by and large, Hyderabad is still one of our weaker cities in terms of projecting sentiment among buyers. Interestingly, we find that the wait time that buyers are expecting before completing the purchase has gone down compared to the previous quarter. And actually, you find that more than half the sample of buyers, they want to purchase very quickly. This, if you connect it with what are the broader economic forces like elections and so on, this seems to suggest that buyers are sort of now getting out of the wait and watch mode, and it seems like a lot of them are expected to start loosening up their purse to buy the house. We added 2 cities, Ahmedabad and Kolkata, so some of the statistics that we have, we don't have the 1-year history for them, but clearly both Ahmedabad and Kolkata have seen a very high change relative to what we had last quarter. I wanted to now bring in Uma to talk a little bit more about the details. We have a few slides on the analytics, and then we can take questions. Uma, do you want to start?
Yeah, thank you, Venkatesh. This is Uma Sitaraman here. I'm in charge of putting out the Housing Sentiment Index on a quarterly basis. I'll share with you a few interesting analytics of the Q4 quarter. Beginning with the price range graph that is on display. The 20 to 40 lakh pricing seems to be the most preferred range all across the country. So across all 10 cities surveyed, this is the most preferred range. It's followed by the 40 to 60 lakh range. And HSI for properties that were above a crore, that means the high value properties saw a decline this time, although only 9% of respondents all across India are looking for properties above a crore. So this shows that there's a very small percentage there, but it looks like there is weak sentiment as property prices increase. Interestingly though, if you look at Gurgaon, even across the last 2 to 3 quarters, 25% of respondents want to buy property which is above a crore, which is the highest among the 10 cities surveyed. So in Gurgaon, there is good appetite, healthy appetite for over 1 crore properties, although HSI this time dipped to well below 100.
Yeah, well, just one, this is Venkatesh again. I just wanted to add one point in the slide. If you look at the right-hand side chart, this is the sort of chart that we produce in our report. So what you have here is there are color bars which reflect changes from one quarter to the other. And then there is a line which reflects the weights of different price points here. So you have prices ranging from below 20 lakhs to 5 crores. And the latest quarter change is the maroon colored bar. And as you can see, there are more bars to the right-hand side, which means there are more, across all these price ranges, there is more expectation of prices going up compared to the previous quarter, especially the yellow bar where really everybody was expecting prices to fall in the next 6 months. So I just wanted to introduce that. I can move to the next slide. So Uma, you can take it over.
Sharing with you the micro market analysis that we work on for each of the cities. We're sharing with you the city of Bangalore here. Bangalore rose by 15% this time, and this was well over the 50% that it rose the last quarter. So it's seen an increase over the last 2 quarters, and it's actually the only city that has maintained an HSI of above 100 across all the 4 quarters surveyed. So definitely there is a lot of interest, a lot of optimism with respect to Bangalore. Looking at the micro markets themselves, 33% of respondents are from the south of Bangalore, and this time South Bangalore witnessed 11% increase in HSI. So if you look at the corresponding graph, you can see that in Q2, South Bangalore faced a decrease of 19%, but that's been well reversed in the last 2 quarters that have been surveyed. Another 28% are from the east and southeast Bangalore. Again, Bangalore North, which is also seeing a lot of activity in terms of hosting a lot of IT corridors, hosts about 29% of respondents, and again witnessed an 8% increase in HSI. The only weak spot in Bangalore seems to be the central business district, and this is kind of understandable because property prices are on the expensive side, and a lot of activity is more towards the peripherals and more towards either the north of Bangalore or the south of Bangalore. We also carry out other interesting analytics with respect to the respondent mix. So for example, one of it is that Bangalore being the IT city, it's not surprising that 51% of respondents belong to the IT sector, and is followed by 9% who are from the manufacturing sector. There's also other questions that we ask, saying, are you buying for your financial purposes or market conditions? And about 61% of respondents cite financial reasons for waiting to make their actual purchase. And a lot of interesting analytics can be found on our website, where we have shared the entire report. 2 quarters back, we kind of found that what we are gaining out of the buyer index is very interesting, and we thought of putting out a similar seller sentiment index just to capture what sellers think. I mean, is it way different from what the buyers think, or how does it correspond to what buyers think? And again, not surprisingly, sellers have always ended up being a lot more optimistic. So if you look at the aggregate HSI for buyers, which was at 108 this quarter, and compare it with the 164 this quarter, you can kind of make out, the bullishness that comes with sellers. And the chart here shows why people are selling. So about 10% of them want to book profits. That's the reason they're selling. And job uncertainty is a big factor. 17% are selling because they're not sure about their jobs. Inability to service home loans is also another major factor why people are selling. And again, quite a high percentage, 24% have owned the property for less than a year and are looking to already sell. And they are the most optimistic also. Their HSI is at 173, while another 25% have owned property for only about 3 years. And looking at the mix of people who want to move within cities, again, Bangalore is turning out to be a hot spot for people who want to move within Bangalore as well as from outside, from other cities, surrounding cities, and also from the north. So while 68% of sellers in Bangalore are looking for property again within Bangalore, maybe they're moving for various reasons, but within the city. 32% of sellers from all over the other cities surveyed also are looking for property in Bangalore, and this also kind of explains the optimism that comes with owning property in Bangalore. Moving on to the next slide. Yes, sir.
Yeah, no, Uma, continue.
Yes. So with respect to the sampling technique itself, as Venkatesh has already mentioned, Magic Bricks carries out a quarterly survey, and the survey questionnaire can be broadly categorized into 3 broad buckets. One is the demographics, the other one is the kind of house they want to buy, when they want to buy, and how they are going to finance their purchase, so on. And the third one is the micro-market questions, which ask the respondents where within each city they would like to buy property. And this actually helps us do a lot of analytics at our end and come up with interesting insights. So this online survey is being carried out for 10 cities beginning last quarter, and we added Ahmedabad and Calcutta to the aggregate HSI index beginning this quarter. The standard questionnaire is mailed out electronically by Magic Bricks, and there are very rigorous validation checks which are carried out to screen out bad data, and then the survey responses are passed on to us. And the respondents usually look at the next 6 months. So we are actually tracking the next 6 months. I mean, what the buyer is thinking, looking at the next 6 months forward. And we're sharing with you the HSI for each of the 10 cities. So this is the Q4 HSI, and you can see that all except Hyderabad and Noida have posted an increase in HSI this quarter. Hyderabad, again, the uncertainty in, because of the recently resolved Telangana issues, people still seem to be undecided, not too optimistic yet. Noida is facing some turbulence. It did post an increase of 33% the last quarter, but fell by 4% this quarter. And Ahmedabad and Calcutta, again, the recently added cities. Calcutta with a very healthy HSI at 132. Ahmedabad just a little below 100. And Mumbai posting a 24% increase, which is the highest increase for this quarter.
So one thing we did, we are planning to do actually is connect the changes in sentiment over time with the changes in actual property values as reflected both in PropIndex as well as the National Housing Bank's Residex. So the idea being that people, would this housing sentiment index be able to capture the trend correctly so that we can actually forecast what should be the prices using this index. And so that's given that we have just started, we have only 4 quarters worth of data, but as we build more quarters, we are hoping that we should be able to answer such questions, whether housing sentiment index leads the PropIndex and the Residex. So that's all we have to say in terms of the broad, the index itself and what it's supposed to signify. So we can take questions now along with Jayashree.
Thanks for the insightful presentation, Jayashree, Venkatesh and Uma. Let's quickly take up the questions now. I would request you to read out the questions and their answers so that all our users may listen to your insights. So Jayashree, are you able to see the questions in your question panel?
Yes, I can see. Shall I start with how demand is assessed by Magic Bricks?
Yes, you can.
I've got Ankur Dhawan who has asked how demand is assessed by Magic Bricks. Now, Ankur, Magic Bricks is a site where a huge number of users come and search for properties this is an unsolicited activity. Whenever you're looking for properties, whenever you're going to the localities that you want to search and so on, there is a lot of activity that happens on the back end. Now, the back-end data is warehoused very carefully. It is screened and outliers are removed. And then we use this data to figure out what is the bulk of the consumer looking for, consumer base looking for. That constitutes demand. That, in addition to certain activities that the consumer performs on the back end, this becomes the demand that MagicBricks puts out as consumer demand. Shall I take another question? Ankur Dhawan has said, is there a survey done to assess demand for a particular property? Ankur, a survey-based structure always means that what I ask you, you're responding to it, and that is something that you will answer according to your sentiment at that point. But when you are performing activity, especially when you're searching on websites, it is an unsolicited activity. It is based on your individual need. Therefore, that is an activity that constantly is happening 24/7 on the site by consumers from all over the world. No matter how robust my survey is, it will always be on a sample database. But when activities performed organically on the site is seamless and completely unsolicited, happens all the time. And that's why that is a better database and a very, very large database. That leads to typically big data, right?
Can I add something to that, Jayashree?
Yeah, please.
Yeah, no, so from an academic perspective, we also try to estimate demand for real estate. So largely that's based on actual transactions that have taken place, and then we try to relate the changes in the number of transactions to a variety of inputs, like the changes in the economy, the kind of factors that generally drive demand, prices, of course, and things like that. So which is a lot bigger analysis, and it takes a lot of data for us to come up with good inferences. So I think, as Jayashree said, there are two ways to do it. One is sort of literally finding out through a survey people's expectations of whether they're going to buy a house in the near future and so on. That's one way of estimating immediate demand. But there's also another longer term estimation, which is done typically in most places abroad, which is based on economic variables and inputs, and connecting that to real estate transactions.
And just to add a little more to that, between the PropIndex and the Housing Sentiment Index, one being a seamless transaction that's happening constantly, the other being survey-based, and with various levels of knowledge added to that, that is what makes this a perfect combination. You can, one assesses the previous quarter, the other one is looking into the future to see what consumer sentiment is. One is actually based on survey and other levels of intelligence. The other one is on your organic activity. So between the two, what happens is that it gives you a very, very a holistic kind of understanding of what's happening in the market. We've got Shikaraj Jadhav, who's asked about what about purchasing a plot in Hinjewadi, Pune. Let me put it like this. When you, there are two types of transactions that you can do in the property market. One is plots, one is apartments. While as a rule, apartments are hugely in demand because the small investor finds it easy to manage, because apartments are typically in gated communities, it is managed by developers and so on. Plots is what gives long-term returns, bigger returns in the future. When you're talking about Hinjewadi, Hinjewadi is driven by the IT community, right? Hinjewadi is one of the largest IT zones in the country today. So what happens is that when you're buying in the IT zone, remember that it is not the local demand that is being fed. What is it is feeding the demand by consumers who are coming from other cities and congregating towards the IT corridors. They this is a long-term demand. This is a robust demand. But when you buy a plot, buy from a developer who you can trust. Also look at buying a plot that is, where the change of land use is done. As a small investor, you may not be able to get the change of land use done very comfortably. So do buy from somebody who's already got the change of land use and who's selling it out as plots that can be developed for residential development. If that is so, do buy your plots. In PropIndex, we have given you what the benchmark rates are for plots as well as apartments. What you can do is check out on MagicBricks, check out against the indices that we've given you, see what the average rates are, and that gives you a benchmark on what you should be paying, right? Does that help you?
I have two questions, Jayashree. Can I take that?
Yeah.
One is Mr. Anurag Madan has asked, how does HSI define the aspirational value of the property? So I think the direct answer is we do not focus on the valuation that the buyer is putting on the property. We are looking at prices. So there is a small technical difference between price and value. So what we are looking at is what does the buyer, a prospective buyer in this market, expect to pay when they actually do the transaction. Since most of the people in our sample, they typically either wait for 6 months or to a year to buy property, they are looking at what sort of prices that they will eventually get. So we don't actually go after the valuation because largely it's very subjective and it can vary from quite a bit around the actual prices. So that is the.
Can I put in a little bit here? Can I add a little bit to your answer?
Sure.
When you look at what the aspirational value of property is a very key, critical thing as far as buyers are concerned today. Say 20 years ago, if you were buying a property, you were buying a piece of property, a house, right? Today you're looking at a composite demand, which means that you're looking at the house, the lifestyle, the facilities around it, how livable it is, and so on. So if you look at, probably what our consumers asking is, how do I assess whether this is a good locality to stay and is this a good property to buy? That kind of aspirational demand. Will the housing sentiment index give you that? No, it won't. Will the PropIndex give you that? Even that won't. But there is another tool that we have on MagicBricks which can allow you to understand what the aspirational value of that property is. Now, the aspirational value comes from amenities. It comes from the facilities around it, which we typically refer to as the physical infrastructure or the social infrastructure. Physical would be the transport corridors, the water sewage lines, the civil works, the water power, so on. The social infrastructure is the schools, hospitals, entertainment centers, retail hubs, and so on. Now, we have something called MagicBricks localities. That is localities.magicbricks.com. When you go there, it is, first the experts analyzed the localities and said that these are the facilities that are available. After that, we have crowdsourced the information where consumers are coming in and rating localities on the basis of all these parameters. So if you want to see what the aspirational value of property is, do visit localities and you'll be able to assess at the locality level what the aspirations are. After that, at individual property level, can you do that? That is very difficult. I don't think anyone in the Indian market has so far been able to capture the aspirational value of individual properties or housing units. Venkatesh, you may want to continue.
Yes, I have one more question, which is by Mr. Jayaprakash Ramurthy. The question is whether the HSI is calculated for capital values or rental values. Right now, we are focusing on the capital values, but we do have plans to extend it to rentals as well. So that is the
rental values are already covered in the PropIndex. So when we tell you what the yield of the property is, that is the capital values versus the rental values, and then what kind of yield you can get. But rental values will also figure in the housing sentiment index, which is a very critical indicator of how housing sentiment is moving.
Right. So I think again there are two parts, right? One part is the rental value, the yield as it is today, and the other one is what people are expecting 6 months from now. And so clearly there also you could have a sentiment of people expecting rents to fall or increase and thereby deciding to either buy the house or rent the house. So the answer is right now we are not focused on that, but we have plans to include that. We have another question by Mr. Anand Mohan, which is growth prospects based on development news and insider information. Again, this is from the perspective of the housing sentiment. These are inputs into why buyers might change their sentiment over time. Right now, we are focusing on the basic factors like the demographic and information like whether they're looking at financial constraints, which is holding them from buying purchases, from buying house, or market constraints. So these are things which we can expand over time. Right now, it is caught up in the price that buyers expect. So I'm assuming that a lot of the information on growth prospects and development gets built into the price sentiment, and we could actually use that, the changes in sentiment, to actually see whether the growth prospects have actually materialized. For example, in Bangalore, we could see that the sentiment has been very strong, and it is backed up by some of the infrastructural development that's happening on the ground in terms of development. So these are things that eventually will be used to explain why sentiment has changed over time. And then there's one last question, which is on what would be the HSI for Noida and Noida extension. Uma, would you have the detail for that?
Yeah.
Uma?
Noida, we have broken up Noida basically into Greater Noida Expressway, new developing sectors, and then Old Noida. So these are the broad sectors that Noida is broken up into. And if you want the HSI for each of these sub-regions, I can give it to you. The latest quarters would be, give me 1 minute.
Uma, while you are looking up that, can I just add something? The Noida, if you look at the sentiment that went down by 4% in Noida, vis-a-vis the huge rise that we saw earlier, Noida market has had a roller coaster ride. The land issues, the current Allahabad High Court issue, and so on. So the Noida sentiment keeps fluctuating because of this, and bulk of this was around the Greater Noida or the Noida Expressway, Noida Extension region. But Uma will be able to give you the actual statistics.
Right. Thank you, Jayashree. That's what I was going to say. So the Greater Noida Expressway did experience a 7% fall in HSI when compared to the previous quarters. So current HSI stands at 133. Whereas your new developing sectors faced a 10% increase this time. So this quarter it's at 125. The HSI number is at 125 for new developing sectors. Old Noida is the lowest, so it comes in at well below 100. So HSI is at 93 for this quarter.
You know, one of the reasons why the old Noida regions are at such low consumer sentiment is because, if you look at the rest of the National Capital Region, there is a lot of redevelopment happening, and redevelopment boosts the prospects of individual localities. But in Noida, the authorities do not allow redevelopment and resale of individual units on the house. For instance, if there's a plotted development, it can be sold as a full house and not as separate floors, which is allowed in, say, Gurgaon or Delhi and other Faridabad and so on. As a result, because the values are very high now compared to what was there, say, 5 or 8 years ago, people cannot afford to buy a whole housing unit, and they are not allowed to buy individual units, individual floors. As a result, in old Noida, the sentiment is weak. Shall I go to the next one, Venkatesh?
Yes, yes.
Okay. We have a consumer, Madana Gopal, who has said, how do we identify the real land buyers? Actually, there is what would we consider the real land buyers? There are two types of buyers. One is the investors who buy and hold the land for some time. Now, these investors could either be small investors who are individuals who have some surplus funds and who buy the land and hold it and have the holding capacity. We also have some professional land bankers who keep buying whenever the market sentiments are low or there's not much finance in the market, and they try to offload at a higher price when the markets rise. Now, who are the real land buyers? Both are good both are land buyers. One is a small investor. One is a professional investor. Then also we have, when you're looking at peripheral areas, you have professional land bankers who will aggregate large clusters of land, which they can then go into joint ventures with developers for development. So there is no real land buyer, so to speak. If you want to purchase land, check out the benchmarks. Never mind who's the real or the unreal buyer. But if the rest of the market is quoting a certain value, we at Magic Bricks and with IIM Bangalore, what we're trying to do is we're trying to give you the statistics and say, this is what the market benchmarks are. After that, you negotiate your price. Whatever is being quoted, you negotiate your price, but at least we're trying to give you some benchmarks so that you can make an informed decision. There is another query here about what is the session regarding Indore market. Is it really there? See, Indore is a small market, but a market fraught with potential. There's huge potential. Large developers, national developers are already there. The important part about Indore is that it is a very well-planned city. The city was planned by the people with the help of the mayor, and as a result, it's a functioning city. So people like the ITES are looking at Indore. Right now, for the last year or two, the businesses have not expanded as much as they should. Once the market picks up, when the market gains steam, Indore is probably one of the first cities where you would see a bump up in sentiment as well as values. There is another respondents were from which part of Bangalore, north, central, south, east or west? I'm sorry, I didn't understand what you are asking for, but I can tell you that if you're looking at the Bangalore market, and I'm sure Professor Venkatesh and Uma would like to add to this, Bangalore is a city, the reason for the high sentiment is that Bangalore has never really collapsed as a market. It never spiked when the rest of the country was spiking on the back of investor interest, and right now it's steadily rising. Its drivers have been IT, and despite the fact that the rest of the country has been reeling under manufacturing slowdowns and things like that, the IT sector has not been so badly hit. We still have business going on, and therefore you can see that if it is an IT-driven demand, that happens in the Whitefield, Electronic City, Sarjapur, those areas. But you also have North Bangalore, which came up because of the access to the new international airport. And there is a lot of land that has opened up. It has its own problems of water problems and things like that. But right now, it is doing fairly well. Venkatesh, would you like to add anything to Bangalore?
No, I think what you said, yeah, I mean, what you said was right. I think the different parts of Bangalore have different infrastructural maturity and also different amenities. For example, some parts of Bangalore have Kaveri water, some don't, and also the road connections and so on. So I think the development of IT has largely been on the southeast, and now it's picking up in the north. But I think what you said largely captures the variation in the market in Bangalore.
Okay. We have Anand Mohan who has asked, how is the growth projected in Hyderabad? Now, one can't, nobody has a crystal glass to look into it. But what we can see is that the sentiment is positive, is fluctuating in Bangalore, in Hyderabad. But when you look at what is happening in the city, you can see that, people in Hyderabad have actually tried to sell old property, upgrade to newer property. They've used this period to kind of upgrade themselves into better property. Also, a lot of developers whose projects were stuck, because the Telangana issue has been resolved, they have completed their projects and the projects have come into the market. So you have stock, but not many have launched. So you're going to soon face a situation where there will be more demand and supply, and Hyderabad will then the market will start to heat up. Typically, that's what happens. When demand exceeds supply, that's when a market heats up. We have Deep Bansal, who has said, an economy factor, what does the new land acquisition bill do to the real estate market? How long would it take to come into effect? See, the land acquisition bill is is something that has many ramifications, and a lot of clarifications are required from governments. So you will see that it will evolve over the next 2 to 3 years. Immediately what I can see is that it is going to be more difficult for land to be acquired and aggregated, and it is going to be more expensive as well. As a result, there are going to be 2 immediate effects that will happen. Developers will start looking inwards, and what has been neglected for years and years, probably decades, core city redevelopment. When instead of always extending the boundaries of the city and going into the suburbs and the periphery to develop, what you will be able to see is that cities will start redeveloping itself. And we have seen this in Mumbai, we have seen this in Delhi, 2 big cities where there has been a lot of redevelopment happening because there was no more land available for development. In Delhi, everything was in the NCR, not in Delhi city itself. In Bangalore, Chennai, and so on, you have there has been a consistent redevelopment of city areas, but that demand has started leading to very distinct trends in a city like Chennai, where IT demand is segregated along the OMR, the ECR, and so on. But you also have a very strong demand from the traditional areas. The same thing is happening on MG Road in Bangalore, where premium demand is one in Whitefield and so on, and in some parts of North Bangalore. But you're also seeing a very, very concentrated premium demand in the MG Road, which is the old city areas. That is typically redevelopment. And this you'll see more and more of, because as it becomes difficult to acquire more land, people will start looking inwards and seeing what they can do to improve the cities. The other thing is that you won't see the kind of sprawl that you're seeing right now. It will all be led by government policies, like for instance the Delhi-Mumbai Industrial Corridor, the Mysore-Bangalore Corridor, the Bangalore-Chennai Corridor. They're planned development led by governments with policy perspectives in place. Only those will be safe for development and investment. Venkatesh, want to add anything?
Yeah, I'd like to add. I think I'm coming from a more an economist perspective on this question. I think I think what Jayashree said is absolutely right. I think the land acquisition bill, if it really gets implemented and actually translates into action on the ground, will cause more of a problem when you build these sort of corridors, as Jayashree was saying, because that's where really you need to accumulate a lot of land. The land that is already in play inside cities, I think the redevelopment, as what Jayashree was talking about, is definitely an option, but it's all conditioned on 2 things. One is the availability of FSI to actually make an impact, to free up more space on a given piece of land. And the second thing is the ability of the infrastructure to handle the increased usage. So for example, in Bangalore, there are places where you don't have water. So if you suddenly take a 2-floor apartment and make it 10 floors, it is going to have an enormous tax on some of the basic amenities. And so I feel, as Jayashree said, the governmental policies are very critical. These regulations have been put in place, but then it has to be supplemented by a good forward-looking policies. Otherwise, you're going to have enormous speculation on prices, because the supply is being bottled and new regulation is preventing new supply, and then you're going to have a situation where everybody is going after the same small piece of land.
Absolutely. We have a very interesting query here, whether there is any correlation between the Sensex and property prices. Actually, there is a correlation between Sensex and consumer sentiment. And today in the Indian property market, I think more than a crisis of finance, it is a crisis of sentiment. The consumer is not buying because the consumer is not convinced that property prices have rationalized, that this is the right time to buy, whether they're getting the best deals, and so on. Otherwise, I don't think the consumer has a problem in purchasing property. Now, you know, the Sensex, when the Sensex goes up and it has been rising, there have been some stocks that have been rising, but it's not a uniform thing all along, and everyone doesn't benefit from that. However, what happens is that the sentiment goes up, and then more investors start seriously looking at the markets. The Sensex drives the property market to that extent that it impacts the sentiment, but does it directly impact the way the property prices properties are being priced? I don't think so. Venkatesh?
Yeah, globally actually the stock market pricing and the real estate pricing, they go with a lag. So typically the stock prices go up and then followed, as Jayashree said about sentiment, the property prices rise after a certain period of time. In India, for example, people use property as an investment vehicle as well. So which means a property is going to compete with the stocks. So to that extent, if there is going to be a high return that an investor can get out of Sensex, it is going to be, property is going to be less attractive. But as we have seen also in India that people buy property more for cultural reasons also. So it is very difficult to tease the relationship between the two. And then if you look at the last few months where a lot of action has happened pre-election, most of what has happened in the stock market is driven by what foreign institutional investors are doing. So since they are not involved in the local property markets, so this relationship is much less in the last few months between property prices and Sensex.
Sure. We're very close to the end of it, but there are some couple of interesting queries which we will take. Aradhana, we can go on, right?
Yes, we can.
Okay. There is Ronak Amin who has said, is there a specific reason to take the interval as quarterly rather than say bi-weekly? See, property prices typically don't change week to week or day to day. Unlike the stock markets, you can't track property prices on a weekly basis or bi-weekly. What you should be doing is, we've taken quarterly, you know, earlier we used to do a 6-monthly property pricing index. But we found that 6 months was too long, markets were much faster, so we brought it to quarterly. We can't say when we will take it to maybe monthly. That is a function of how the markets are performing. Right now, quarterly seems to be a good interval to assess property pricing. We've got Akash Sagar who says, I would like to know more about more on the scope of Chennai luxury apartments development. See, luxury apartments across the country have been doing fairly well in the last couple of quarters. We find that there is an appetite for luxury apartments across different markets, right? If you look at what's happening in Chennai, at the city level, we find that there is a demand for properties in the 1 crore and above, and it has been rising, a small rise, but rise nevertheless. If you look at what is happening in terms of supply, I think it is still oversupplied. In central Chennai, the maximum supply is in the luxury apartments category. So we would say that if you are looking at your market, I'm assuming that since you're saying development, you want to know whether you should be developing in the luxury apartments in Chennai. I would say that check out the demand and supply as we've given in Magic Bricks PropIndex, and also see what the consumer sentiment is from the sentiment index. That will tell you whether people want to buy luxury properties and how much of a lag there is. Suppose there is far more supply than demand. Even though demand is good, I would say that you be cautious and try and build in those segments where you know that the consumer demand is high and that you will be able to sell. Right? We've got Nilesh Gaikwad, I've got Narendra L who said, are there trends for Bangalore West to improve commercially for IT? Narendra, right now, according to our understanding, Bangalore West, we don't see a huge potential. Venkatesh, maybe you would like to comment on this.
I think I mean, we don't have the detailed level information that PropIndex has, but I think in general, from what I understand about the Bangalore market, I concur with what Jayashree said. Bangalore West has got limited expansion potential from an IT perspective, but clearly the IT action is more in the north and the East Bangalore right now.
Okay, we've got Prakulp Mata who says, do you really think investors, retail and HNI from metro cities can trust tier 2 and tier 3 cities for investing? Are these markets reliable and worth yielding effective returns in timeline of 3 to 5 years? In 3 years, no, I don't think so. I think that tier 2 and tier 3 markets are slow, and right now, if you are an investor, I think you should stick to the markets that you know very well. The tier 2, tier 3 markets will start rising when the economy starts rising, and currently we are actually waiting for a government, right? Once the government comes in, we'll have policies, and then we'll be able to figure out how these markets are doing. However, they are driven by local demand. So when you talk about yields, you'll have to take a much higher, longer term view, and when you invest, look for areas where you get good rental returns while you're holding it for the the leverage value to go up. But I still would say that tier 2 and tier 3 cities, unless you know the markets well, I wouldn't advise you to go in as a small investor into markets that you don't know yet.
I have one question on the HSI. This is a question from Ajay Kumar, who is asking whether developers' input and feedback has gone into the calculation of HSI. Right now, we don't have the developers' input. We have been toying with the idea of creating a separate index, trying to capture the builders' view of prices. But generally, this is something that other indices are out there already, which capture some of the builders' sentiment. So we don't want to duplicate some of the work. So we are sticking with what we have right now. The second question I have from Ms. Preeti Sharma is, what is the biggest challenge that you had to face while compiling articulate details as captured in HSI? I think the biggest challenge is data, in the sense having the buyers fill up all the data in a way that is clean and not having important pieces of the information that we would like to use is the biggest challenge. The other thing is, of course, the coverage. I mean, right now we are using Magic Bricks and their ability to reach out to customers. So I think my concern as an academic is the selection, in the sense whether there are certain kinds of buyers that are getting left out in the calculation of index. So we are trying to test it out by going to the property fairs and also to other places where we think we can get access to potential buyers. And we are testing out whether what we find in HSI through the Magic Bricks portal is similar to what we find elsewhere as well. And that gives us a little bit more confidence that we are getting the representative buyers in the mix. But these are things that I do worry about as an economist.
Let me add to that, Venkatesh. One of the things that we did when we get findings out of the data, we do run surveys, we do run offline surveys, we do run target focus group discussions with consumers offline, so that we are not only concentrating on consumers who are online but also offline. As part of Magic Bricks activity, this is a routine activity, regular activity, and wherever we see spikes or variance with what the data is showing, there is always an intervention done to figure out what happened in the market and why consumers offline and online behave differently. Currently, we have, in the beginning we saw a big difference in the online and offline behavior of property consumers. But today, our research shows that bulk of the users go online to start their search. The transaction does not conclude offline. They conclude online. It happens offline. But a lot of the consumers who are coming and searching, asking, talking, discussing, people like yourselves who are engaged with the real estate community or the fraternity that is providing you with information are all, a lot of them come online. So there is a big overlap between the online and the offline users, and that is why we find that the offline surveys yield results very close to the online ones. Having said that, this is an activity that we should be constantly engaging with. There is no scope of saying that I found it online, therefore it is that is. We always check it out against the offline activities, right? There is one. I think I will have. We have a huge bank of queries coming in, as I can see. There is something that we would like to tell you, that while this webinar, we would say that we really thank all of you for being so overwhelmingly attentive to what we have been saying, and we would like to continue this discussion. We will announce another webinar where we would like you to come and participate. But the ones who have asked the questions and have not been able to get answers, we would send you, we will email the answers to you. We'll make it available on MagicBricks so that you can log in and check it out. We'll send you a mail to figure out exactly where your answers will reside. And Venkatesh, if you would also like to address the consumers that way, even though we are well over our time, what we would like to say is that we would like to keep engaged in this discussion as IIM Bangalore and as MagicBricks. Venkatesh, please.
Yeah. I also would like to thank all of you for patiently listening to us. We definitely, as an academic institution, we definitely would love to hear your feedback. We are also constantly in the process of improving ourselves and improving the quality of the data and survey that we are providing. So if you have any thoughts, any suggestions, please let us know as well. And I think we will coordinate with MagicBricks in responding to all your questions, which could not be answered online. We will try to do that as soon as possible. And again, I'd like to thank you for spending an hour of your time listening to us.
And I'm really thankful to our guest speakers today for conducting this informative webinar. It was indeed a great session. I would also like to thank all our participants for their support in making this webinar a success. Thank you for joining us today. Thank you, Jayashree. Thank you, Venkatesh and Uma, for taking the time out. I hope you have a great evening ahead.
Thank you. Bye-bye.
Thank you.
Bye.
Bye.